morning, it's Dustin with Highway 1 Capital on a rainy Friday morning, November 14th, about 10:50 Pacific time. The market has seen quite a reversal this morning with the S&P and especially the tech-heavy NASDAQ rallying and both turning positive. The NASDAQ was down over 2%, almost 2% earlier, and now it's positive. We'll see where we finish the day, but clearly a reversal. But we are seeing equity markets experience much more volatility lately as valuations really are in focus, the economy, and also the uncertainty with Fed policy. Clearly, valuations are stretched, and investors are paying a lot more attention than we've seen in the past. This is the third 3 to 4% pullback in the S&P in the last 5 weeks, and basically after 5 or 6 months of almost a straight up market, we're starting to see this volatility kick in. Doesn't really appear to us as that the bull market is over. Likely more of a draining of excess in some of the crowded expensive trades, but we'll see as the data comes in. There was a very interesting report this morning put out by Jeffrey Buckbinder, LPL's chief investment strategist. It was entitled "An Outstanding Glass of Earnings Treated as Half Empty," and I think it did a very good job of kind of articulating what we're dealing with right now. It highlighted the strong earnings with just 40 companies in the S&P left to report. 82% of the companies have beat earnings expectations, and that's significant. That's the most since 2021. And the index earnings are tracking to a 13% increase, nearly double the quarter end estimates. But despite these strong results, the stock action hasn't really followed in suit. Our friends over at Evercore, they showed a piece on that. They said the one-day price earnings action following these quarterly earning reports leans negative, with shares across 6 of the 11 sectors in the S&P dropping after delivering results. So we're seeing strong earnings, but stock prices aren't following through, which just tells us that there's lofty expectations and elevated valuations, which create an environment where investors are demanding more than they're getting. So while one-day price action doesn't constitute a trend, the stocks are clearly priced for being priced for great news creates an environment for disappointment and also this volatility. Another area that's been in focus and we've covered over the last several weeks on these calls is Fed policy. We're clearly seeing a much more divided Fed on the appropriate path forward. 2 of the members, Collins and Schmid, likely favor no cut. 4 support a slower, more cautious approach, which is where some of the concern comes in. And then the 3 members, Bowman, Marana, and Waller, appear ready to cut. We're going to find out here in early December. But the odds of a December rate cut has gone from almost 100% probability to today it's only a 41% probability. So we mentioned that on our last call with when we had a meeting with PIMCO. They talked about they felt that the Fed might not raise, and that kind of highlighted what's going on. But regardless, we think over the next, by the end of the year, next year, the direction will be for the Fed to continue to cut rates, whether it happens in December or it starts in the first quarter of next year. We'll see. But it's creating more volatility. Even the 10-year, the 10-year's at last week on our call, it was at 4.08, and now it's up to 4.14. Not problematic, but it just shows that there is some uncertainty not only in the equity markets but also with fixed income.